Alright everyone, Cowboy Trades here, welcome to the channel. In this episode we're going to be whale watching. This is the on-chain metrics series that I run on my channel where we discuss all of the most important on-chain metrics. We talk about how these affect the price of Bitcoin in the mid to higher time frames, and we like to specifically focus on doing the opposite of retail traders, and we like to follow the smart money, the institutions and the whales. There are two different currents in the cryptocurrency markets. One of them is the current of which retail swims in, and the other is the current in which the smart money swims in. If you swim in the same current as the smart money, you will do well in these markets. So let's see what the smart money doing right now. Well, right off the bat, first of all, let's look at retail wallets. Now, it's been about a week since I have been gone from this channel. I was fighting in an international kendo competition. So let's really see what's happened in the past week or so since I've been gone. Well, the retail wallets have been absolutely inflowing to the upside, and this is not a good sign. If we just zoom out, you can really see this entire bear market. The retail wallets, they weren't accumulating at 10,000, 8,000, 11,000, 20,000. They were just stagnating. In fact, they actually started to sell when Bitcoin was at 10,000, just before this run up to about 59 and 69,000. So what did they do? They were selling, stagnating, not really doing anything during this bull run. And when did they actually start to buy? Well, you can see this tipping point right here, round about 38,000. They really started to slowly start grinding into this market until approximately June, when Bitcoin was at 26,000. Since Bitcoin was at 26,000, you tell me, what has retail sentiment been like since Bitcoin was round about this 20,000, just after it bottomed at 19,000? The bottom's in, right? 19,000 or 17,600, wherever it was. Every retail trader was saying the bottom is in, the bottom is in, the bottom is in. So as you can imagine, retail wallets accumulate, price breaks down into new lows. And at this moment in time, since I've been gone, retail wallets have once again gone on a massive run to the upside, and they are accumulating. So they're buying right now. We know that in these markets, very simple, there has to be a seller for every buyer. Who do you think is currently selling this Bitcoin to the retail wallets? Well, let's come over to the Bitcoin wallets that hold more than 1,000 Bitcoin. These are your institutions, your whales, your Michael Saylors, your Teslas. These are the smart money. You want to follow what they're doing. So let's zoom in and see how they've navigated this cycle. We talked about this many times on the channel, so I'm really going to speed through this because I'm hoping most of you know how these impact the market in the first place. But once again, institutional wallets absolutely inflowed into this market, and institutions were ruling this market, and we'll talk about how I know this in the next chart over here. But institutions were buying until Bitcoin hit 46,500. Now, they did not call the exact top. They didn't sell at 69,000, but would you be too salty if you sold all of your Bitcoin at 46,500? It went up to 69, and then it went all the way down to like 15, 16,000. Absolutely not. The institutional money, smart money, they started selling when Bitcoin was at 46,500. In fact, you can see this dramatic run to the downside, and they were almost fully out of this market when Bitcoin was priced at 40,900 approximately. So since then, what has institutional traders been doing? Well, they've been sitting on the sideline throughout this entire, redistribution accumulation phase when Bitcoin went back up to 69,000. And when Bitcoin started to break into a bear market, they haven't been too interested in dollar cost averaging, accumulating. There was a little spike up in February, but then we got some, bearish news. We had that recession confirmed. We also had financial conditions take a very negative pivot to the downside. And, since then, they did run up for a couple of days, but then they started to sell again. So what are institutional traders doing at this moment in time? Well, like I said, I've been gone for a week, and we have come down and made new lows. So once again, you've got two sides to the coin here. Over on the retail side, retail is guzzling up the dips. They are buying. Who is selling to them? The smart money, the whales. So I always do like to talk about on this channel, if you do swim in the same current as the whales and you do the opposite of retail traders, you will do just fine. This is something I haven't talked about as well, but another metric that I think is absolute bullshit is if you're going on Coinbase and you see these people on Twitter like 90% of people are buying Shiba on Coinbase, 78% of people are buying Dogecoin, you must buy now. That is a stupid metric. If you follow that metric, you are going to get absolutely wrecked. Who cares what the average retail trader is doing over on Coinbase? Do not look at these metrics. You will get absolutely slaughtered. So let's move on to the Bitcoin ratio of retail to institutional addresses. This is super simple. It is simply the number of retail addresses divided by the number of institutional addresses. And when we do this, we get this blue line over here. Once again, retail to institutional address ratio. Now, when this goes to the upside, we know that retail traders are piling into this market in comparison to institutions. And once again, we talked about how institutions really started taking over during the 2018 bear market and during the 2020, 2019, 2021 bull run that we had. Institutions were absolutely taking over this market. So when we do pull back up the price action and we compare these two charts together, you can really see the pivotal moment when Bitcoin was almost topping out around about 46,000. The retail to institutional address ratio was just skyrocketing. And once again, what's happened in the past week that I've been gone, the ratio has gone to the upside once again, which is very bearish for the price action. Now, moving on to the whale shadows, there's not too much to update on this. I talked about this maybe a week or two ago over on the 11th of November, how there was about 3.7 thousand Bitcoin that got outflowed when Bitcoin was priced at 17,000. So, even if these are relatively small amounts, as you can imagine, if people see whale alerts all the time, 2,000 Bitcoin, 4,000 Bitcoin, 5,000, 10,000 Bitcoin outflowed. It doesn't seem like a big deal, but when these OG wallets that have been holding for 7 to 9 years or 10 years plus start to outflow, it's definitely not a good sign on the markets. There is a really small one that happened yesterday, 200 Bitcoin or so. Nonetheless, like I said, really not a big deal, but I do just like to let you know whenever I do see some of these 10-year outflows. Now, moving on to the Bitcoin active addresses. If you don't know what the active addresses are, they are defined here by Glassnode. Basically, if you've got a Bitcoin wallet and you've sent Bitcoin or received Bitcoin, then your wallet will become an active address. Now, you can imagine, towards the top of, literally exactly at the top, as you can imagine, people are selling. That is why it is the top. There's more sellers in the markets than buyers. Now, when we come over to the active addresses, you can see a very interesting thing. Active addresses start to go up. As you can imagine, people are withdrawing their Bitcoin from their hardware wallets like Trezors, Ledgers, and they're sending them to exchanges. There's active addresses left, right, center, and because of this, active addresses go up. It normally correlates to tops in the price action, or maybe not necessarily tops, but you start to roll back to the downside if you do have big moves up in active addresses. Now, over here you can see as well, March 2021 called the first top for Bitcoin. I believe this was around about 60,000 or so, 59,000. And then you can come over and see when Bitcoin actually topped out at 69,000 in October, active addresses also spiked out and topped over here. So just a quick update on active addresses as well. Active addresses are still remaining at very elevated levels. There are tons of, there are tons of wallets right now that are, very panicked, and for obvious reasons, a lot of exchanges are going bust, and, these exchanges, these people, they're keeping your money. So, people are staying on their tiptoes. They're making sure, they're sending their cryptocurrencies to exchanges to liquidate if anything goes bad. And I do believe, a lot of these active addresses are because people are liquidating right now. And, obviously when you look at the price action definitely agrees with this statement. Now, moving on to the Bitcoin active addresses sentiment indicator. This is really just another way of quantifying the active addresses. On this one, I'm interested in the 28-day active addresses change in percent terms. Now, as you can imagine, active addresses spike, price moves to the downside. So when we're looking at the 28-day active change, you can see we've got a 32.8% increase in the active addresses, and we've got a almost 13% decrease in the past 28 days in terms of the price action. Now you can see we had a peak over here in the 28-day active addresses change that was about 27.5%, and obviously as we're around about 33, we've obviously eclipsed this previous level. Now when we go back to the last time that active addresses were at these elevated levels, we had an active address change of about 37%, and what was the price trading at? It was trading at 30,000. When we zoom in, you can see this was more or less the tipping point before Bitcoin started to break down to the downside. So once again, this is just a nice way to visualize the 28-day change and really focus on the lower time frames when we are looking at active addresses sentiment. Now moving on to the Bitcoin price drawdown from the all-time high. Once again, this is super simple, a metric that we will fly through. This basically tells us when these pink lines cascade to the downside, it tells you how much Bitcoin has dropped in percent terms. Now, a lot of people like to talk about, you know, the US dollar drop. I'm not too interested in that. Obviously, you know, when you have a bear market in, you know, 2013, prices at like $200. When you have a bear market in 2018, prices at 4,000. When we have a bear market now, we might bottom at 14,000. So looking at how much price drops is not necessarily going to help you as much as the percent drop. So when we do look at the previous bear markets, the drawdown from the all-time high. So how much did we fall from Bitcoin's all-time high? 2015, you dropped 85%. Over in 2018, you dropped almost 84%, 83.6%. And right now, it's a little bit hard to see, but we've dropped about 77%. So in comparison to these two previous cycles, I still do believe, you know, even in a best case scenario, if, you know, FTX, these exchanges weren't going bankrupt, it still makes sense that we should push a little bit more to the downside. And you do also have to bear in mind, we are really in uncertain economic times that Bitcoin hasn't been around for. It's easy to look at, you know, how the stock market reacted to recessions and these previous events that happen, you know, once a decade or so, but Bitcoin hasn't been around for this long, so we really don't know 100% how Bitcoin is going to react to the rest of the stock market. In my opinion, though, I do think we should have a drawdown from the all-time high at least on par to what happened in 2018, because once again, what happened in 2018 was much less bearish than what is happening right now. We're really having a liquidity crisis in an unprecedented level that we have not seen in, forget the cryptocurrency markets, the stock markets, the equity markets, the bond markets, everything outside of crypto, which a lot of quote-unquote crypto gurus on YouTube don't want to look at, which is why they weren't able to call the bottom, is what we like to focus on this channel. And the rest of the economy right now, which I won't focus on in this video because this is on-chain metrics, is it's shit. There's no other way to say it. It is really bad right now. So when we look at the when we look at the drawdown from the all-time high, I think being conservative, if we do look at the price chart for just a second, we talked about, you know, how there's support around here. If you're an Elliott Wave fan, on the weekly time frame as well, it could hold down about 12,000. Your Elliott Wave 5 count holds 12,000. So between 14 to 12,000 is really the next major area of support. If you're extremely conservative, an 80% drawdown to 14,000 is, you know, once again, this is the most conservative in my opinion that you can really draw from. Could we come down to, you know, 12,000, which is an 83% drop? Yes, we definitely could. Could we eclipse the previous drawdown from the all-time high in 2018 and go fill one of the CME gaps that we've got round about this 10,000 level that I've talked about in my YouTube channel? I talked about the bear market targets right here. Over in this video, we talked about how there's a CME gap that we do need to, well, we don't need to fill, but it would be very nice to see Bitcoin come and fill this CME gap at 10,000. And then in my opinion, after that's filled, I really think, you know, the only way is up. You know, take that with a grain of salt. Of course, we could go a little bit lower, but around about 10,000, I really do become extremely bullish. So just a little note there. Once again, if you're more conservative than me, that's fine. We could have an 80% drawdown, and this would still put us, like, you know, slightly higher than how we were in 2018. So I really do think 14,000 at least is what you should be looking for. Now we're going to be looking at the known illicit flows as the percent of total flows. Now if you're wondering what known illicit flows are, it's defined down here by Chain Analysis. Illicit services include ransomware addresses, sanctioned entities, darknet markets, and addresses associated with scams and stolen funds. Notice how I'm highlighting these scams and stolen funds. I think we all know what's been happening in the past couple of weeks, you know, with people like SBF running away with people's money. So quite recently there was talks about how a ton of Ethereum was quote unquote stolen. Yeah, stolen, right? Yeah, we all believe that. But nonetheless, for this, we're really only focused on Ethereum because there's nothing to update for Bitcoin. There really hasn't been some illicit flows for Bitcoin. If we do come over to Ethereum though, you can see in the past 3 months, it is at extremely elevated levels. 1.13% of the entire supply is being sent basically illicitly. So, and once again, you have to bear in mind this is known illicit funds. It could be, and obviously will be, higher than this because, you know, we can't obviously know all of the illicit funds. When we come over to the year to date, once again, you can see not the highest it's been. There has been, you know, higher levels than this, but, you know, when you do have these spikes in illicit funds, this is normally when rug pulls happen, scammers come into the market, people like SBF take people's money, and it leaves a sour taste in investors' mouths. This lowers investor sentiment. People are more cautious when they come back back into these cryptocurrency markets, and people are less likely to come back in after they've been, you know, rug pulled like by someone like SBF. So this is definitely not a good signal. It's, like I said, not something that we really look at on this channel, because it's not often that you have these massive spikes where illicit funds are being sent to and from the network. So definitely a bearish signal, definitely a one that I will keep you up to date on if I do see any more spikes. Now, that's basically all I've got for you. I do also want to highlight that while I am bearish, while I am looking at these on-chain metrics, and I am highlighting for a plethora of reasons why whales are bearish, and, you know, I could leave it on that. Whales are bearish. They've perfectly navigated this market. We always like to follow what the smart money's doing. Now, while I am bearish, I would like to talk about the fact that I've been bearish for 6 months. You can go over on my Twitter, you can go over on my YouTube and see I was posting things like this 6 months ago. You know, some people laughed at me, but now we're down at these levels. So all I want to say is, while I am bearish right now, I believe we're a lot closer to the bottom than the top. And, you know, for example, a lot of people were bullish at, you know, 60,000, 50,000, 40,000, 30,000, 20,000, and at the quote-unquote 17,500 bottom, but these people are now flipping bearish. So once again, I'm not saying that we're going to drop like 50% or, you know, even more. I really do think round about that $10,000 is going to be the absolute bottom for Bitcoin. So I think we've got a little bit further to go in the immediate short term, and the mid time frames I am still very bearish, but in the higher time frames, in terms of, you know, what happens in the next year or so, I really do think these markets are getting ready to kind of start to get ready to pivot. Obviously, once again, start to get ready to pivot means that this could carry on for another 3 to 6 months, and I personally talked about how on my channel I believe the bottom for Bitcoin is round about mid Q1, you know, February, maybe March time. That is personally when I think we bottom. So we don't have too much more to go to the downside, in my opinion. I've already started buying Bitcoin at these levels where everyone's getting terrified at, but yeah, just thought I'd let you know we're much closer to the bottom than we are to the top. This is the time where, you know, even if you're bearish like myself in the, you know, short to mid time frames, this range that we're at now round here, you know, 16,000, 15,000, 14,000, this is where I get extremely bullish to buy Bitcoin for the higher time frames. For the long run, for the next run up that will take a couple of years, but will definitely be worth buying down at these levels. So that's all I've got for you today, my friends. As always, if you enjoyed the content, like, comment, share it with your friends. Definitely helps the channel to grow. But yeah, that's all I've got. Cowboy out. Peace.